Good afternoon. Today I've got one easy tip to help you save money on your tax bill. We're close to the end of the year. Hopefully you had a good Christmas. Obviously, please let me know how your Christmas went. You can send me a private message. You can comment on my posts. I always love to hear that. But since we're getting to the end of the year, I have a tip for you on how to save money on your taxes. Traditional and Roth individual retirement accounts are ways for you to save money on taxes in different ways. And understanding the difference between the two of them can help you maximize the amount of tax savings, right? Maximize the amount of money that you save from paying on taxes, right? So they're taxes that you don't have to pay now. The reason that I'm a big fan of reducing your tax bill is because it's money you've already earned. In some ways, it's the easiest money to keep because you don't have to work longer hours or figure out a way to make more money. Hey, you've already earned it. Let's just give less of it to Uncle Sam. So the traditional and the Roth IRA are both ways to save money for retirement. A traditional IRA or a traditional 401k or 403b, depending on who you're working for, are ways for you to get a tax deduction up front. So the money comes out of your pay tax free, and then that money grows tax deferred inside that account, and you pay taxes on it when you retire or when you get a little bit older. The Roth IRA or the Roth 401k or 403b, you pay tax on up front, and then the growth is tax free. And you don't have to take a required minimum distribution at any time. You can just let it keep growing. And as long as you have earned income, you can keep contributing to it. Knowing when your tax bill is going to be higher is important here because if you suspect that you are going to be paying more taxes during your income earning years, then you should probably use a traditional IRA. If you believe that you're going to be spending or you're going to be paying a higher tax bill in your retirement years, then you probably should invest in a Roth IRA. The reason why this is important is you want to be taxed when you suspect that your taxes are going to be lower. You can also do what's known as a recharacterization. So if you have money in a traditional IRA, you can recharacterize it or you can convert it to a Roth IRA and pay tax on it during that year that you do that change. The nice thing about a recharacterization or a conversion is that you have some control over the taxes you pay because you pick the years that you do that conversion in, and you'll pay the tax rates in the year that you do it. So if you have a large tax loss that you can use to offset it, or if you didn't make as much money that year, you might be able to use that year as one to do a conversion so that you pay less tax. And then not only did you get the tax deduction up front, but now you're going to get, after you paid a little bit of tax, you're going to get the growth tax free. These are some tips to help you really plan out your own strategy for avoiding paying so much in taxes, right? Minimizing your tax bill isn't a bad thing. It's something that's good. It's something that's, intelligent to do and to help you plan for your financial future. Please post a question or a comment. Send me a private message if you want to talk about it privately. It's an important topic. Remember, this doesn't apply to everybody. This is for the majority. There may be some exceptions where you want to do something different than what I'm recommending. And that's why I like having the comments because it helps clarify some of the outliers or some of the unique situations that people find themselves in. So again, post a question or a comment, send me a private message if you want to talk about it privately. And until next time, I wish you unlimited success.